Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Friday, the 6th of May. Starting off with the FTSE 100, and you can see where there's been this loss of the 200-day moving average, 61.89. That's also the level of the 50-day moving average, and really well below that, we've got the risk of a move back down towards this uptrend line, the lower parallel of the line here from the start of the year. Just heading towards 59.50, chart support at 60.36, and it'll be difficult for the shares not to retest that former March support while they remain below the 50 and 200 day lines. That area could be probed as soon as later on today, Friday. On to the DAX, and here we've seen a sort of a struggle to hold the floor of a rising trend channel, which has been in place since the beginning of the year. Here we've got a situation where there is not only this uptrend line from February heading towards the 9800 level, we've also got the bottom of this gap at 9770. It would be very surprising if we didn't go on to test that 9770 level as new support over the next session or two. Resistance 98.95 at the 50-day moving average in the first instance, and really if you're a bull of this market, you probably want to see an end of day close back above that before going long again, or aggressive traders would be buying at that April gap floor 97.70. End of day close back below that gap would be rather ominous and suggest that we're heading back towards 9500, which is the April support area. In fact, 94.84 was the low last month. Onto the US markets, and here there are critical levels as far as support is concerned. Not surprising given that we're in the run up to the non-farm payrolls. 17,650 was the previously suggested support area. Probably would revise that down now to 17,500, which is just below the 50-day moving average at 17,523. So that's the sort of support area we're looking at the moment. It'd be very surprising if there wasn't at least an initial probe there, even if we then headed up higher towards the top of this channel, 18,500, over the following few weeks. As far as momentum buy triggers are concerned, probably that late April low there, 17,652, above that on a weekly close basis for Friday might suggest that we're going to head higher, and that would be the direction to follow. On to the S&P, and hanging in the same way in a sort of relatively precarious manner, bounced towards the 50-day moving average at 2042, and really at the moment that's the line in the sand as far as the bulls are concerned. We want to hold that on a weekly close basis, test it, and then rebound to give us confidence that this market is not rolling over as it looks at the moment. Top of this gap at 2065, and it'd be nice to be back above that. That's the mid-April gap to the upside. So really, momentum triggers are sought out here rather than anything else. Otherwise, the trade is probably to be looking to any probes down towards last month's support at 2033. If we can get through all those hurdles, 2200 is the top of February price channel target. Onto the Nasdaq, which has been the more sickly of the big US indices here. Here we're sort of languishing towards 4,300. We've got a support line there, or support area at 43.32 from March, and that's likely to be the target here for this market, especially while we are not able to break back above the 10-day moving average at 43.86. So basically in the middle of that range between just under 4,400 and towards 4,200 at the moment. RSI at 34, so still not oversold and having the potential to tick down another 50 to 100 points. Onto the currencies, and dollars fought back well over the second part of this week. Key reversal down for the FTSE earlier on this week, and really well below the 10-day moving average at 145.45. There's a risk of a probe towards the 20-day line at 144.11. RSI still above neutral 50 to stand at 54 and on an extended uptrend line from January. So the momentum still towards the upside, and that's why the 20-day line has been picked out as a potential support area, although it'd be understandable if people waited for the 10-day line to break before going long again in order to target the top of this January trend channel at 150 even. Euro dollar has disappointed the bulls over recent sessions. We had that spike through 116, trying to find support here probably towards the 20-day moving average at 113.53, RSI at 55, so that gives the balance to be a positive one, and with a retest likely towards the 116 level again, even if that is roughly the limit or the top of the range that we see over the near term. Dollar yen still in focus as far as being the more dynamic of the crosses at the moment, the main crosses, finding this resistance towards 117.20, 107.20, 107.50. We really need to see the weekly close above that in order to inspire confidence that we could get up to 109, 110, rather 110 anytime soon. 110 obviously the area at the top of this falling trend channel from January. Can't rule out a final test of support towards 105 and the bottom of the 2016 trend channel before this stock builds a final base. Finish off with gold, which has probably been the most disappointing of the major markets over the recent past. Not able to hold anywhere near that 1300 handle, which it briefly hit at the start of the month. Likely support here, the old resistance 1262 in April there, 1270 the second high. So into the 1260s probably, even if only briefly, before we then try and head higher to retest 1300. That's it from me. More updates here at the same time on Monday.